Hello, everybody. Long time no speak. It's been a really rough 4 weeks, I think, since the last time I was on here. As you all know, most of my positions, they've all gone down. But here I am putting on a brave face to update you on Magnachip ahead of the big Monday that's coming up, talk a little bit about Groupon and the new CEO, and pitch a new idea that's a real bioturd, which is CTIC. So where shall we start? I'm going to keep looking over here because I'm looking at my other computer to watch how much money I lose, excuse me. Freudian slip while I'm on this thing. Magnachip has a deadline on Monday with the CFIUS. This is the second time they've had the CFIUS deadline. And there are three options that could happen come Monday. The first is that the deal clears. The second is that the CFIUS tells them that they are going to block the deal and send it to the president to formally block it. And Magnachip either pulls the filing and breaks the deal with Wise Road, and Wise Road pays the termination fee, or it goes to POTUS to block it, and Wise Road pays a termination fee. And the third and final possibility is that Magnachip pulls the filing and refiles like they did in September, and then that pushes it another 3 months. The odds of it closing and clearing on Monday are virtually zero. There was an article that came out on CTIC yesterday that said that that the company has, I don't remember the exact phrase, but it was like low hope in clearing. But there was a source from Wise Road that said that Wise Road was cautiously optimistic it would clear. But CTFN says that Wise Road was basing that optimism on the fact that CFIUS has not contacted Wise Road or Magnachip much in the last few weeks. And I don't know why that would make them cautiously optimistic, but that was the reason why they gave for why they were cautiously optimistic. And the interesting thing to me, and I can't really explain it, is that last time CFIUS notified Magnachip 17 days ahead of the deadline with a letter that said that they were likely to refer it to POTUS to block it. And Magnachip AK'd it. They AK'd it on Monday morning. The letter came on Friday. So they did it the first business day after they were notified. There has been no 8K, and this is the last business day before Monday. So you can interpret that a few different ways. You can say, okay, maybe CFIUS did not send them a letter this time. That seems unlikely to me, given we know the protocol from last time is they send a letter and let companies know ahead of time that they're planning on blocking it and it's going to go to POTUS. Just a little bit background, most CFIUS blocks do not go to POTUS. 90% of the time, the companies pull the filing and either drop it and the merger dies, or they refile. POTUS usually only officially blocks like one deal a year versus 10 plus or like last year was 9, got blocked by indication that they were going to send it to POTUS, and then the company just drop it. I guess it doesn't look very good to have your deal signed by POTUS as a way to terminate the deal. So maybe they didn't send a letter this time. I don't really think that's possible, but maybe. The second option is that Magnachip got a letter and they just didn't 8K it. The odds of that are virtually zero because the Wise Road also got the letter in August, and the CTFN article basically didn't say that they were sure they were going to get blocked. Wise Road was cautiously optimistic, so they wouldn't be cautiously optimistic if they got a letter saying that they were going to block it. And then the third possibility, the most likely possibility, or I shouldn't say, I'm sorry, not the most likely possibility. The third possibility is that CFIUS is not going to block this. and they are going to let it go through on Monday. And that's why they haven't sent a letter. Of course, that's extremely unlikely, but it's possible. A lot to unpack here. So what do I think is going to happen on Monday or maybe this afternoon? Well, we could get an AK at any time from CFIUS saying that they are planning on blocking the deal. If they block the deal, you then have to ask yourself, what are the odds that Wise Road and Magnachip want to pull and refile again? CTFN said that CFIUS isn't even engaged with Wise Road and Magnachip. So I'm not really sure what pulling and refiling would do. If they're not even engaged, what mitigation efforts could possibly be done differently a third time around? The answer, of course, is none. So the only reason why they would pull and refile would be to kick the can on the termination fee. And I don't even know if Wise Road can do that unilaterally or if Magnachip has to agree to the pull and refile. It gets interesting. If they pull and refile, the absolute drop dead date is Maisie got a teeth cleaning 2 weeks ago, and they gave her an IV in her paw, and they shaved part of her paw, and she's been licking her paw pretty much 24 hours a day since then. And not only does it drive me crazy, but I'm worried it's going to get infected, and I'm going to have to bring her to the vet again for something that they did. So that's why I keep looking over at her, and that's why I'm annoyed. The absolute drop dead date is mid-March, and if they refiled, or something like March 17th or something like that, and if they refiled, the new CFIUS dead date, new CFIUS end date would be March 12th, and POTUS has 10 or 15 business days to block it if it gets sent to POTUS. So I don't know what happens if you hit the drop dead date in March and POTUS hasn't blocked it yet. Does Wise Road argue that they don't have to pay the breakup fee because no government agency has blocked it by the end date? So I don't know if they're trying to play games or whatnot. Clearly, Magnachip would sue them. So I don't know what the odds are of this thing just all dying next week, or if it being pushed out. The last thing the CTFN article said was that Wise Road is unaware of any alternative plans Magnachip has if the deal breaks. Well, Wise Road would not know anything about what Magnachip's plans are, and Magnachip can't look for another merger partner while it's in a binding definitive contract with Wise Road. The only reason why Cornucopia was able to be entertained was that Cornucopia approached Magnachip, and it was at a premium price to the $29. So all that being said, what is likely to happen with Magnachip over the next 3 months? If it doesn't happen next week, it'll happen at the end of March. But why don't we pretend like the deal breaks on Monday? And I'll tell you some ways that I think this can transpire. The deal breaks on Monday. I think within 24 hours, if not immediately, the company will give us guidance for quarter four, because they always give guidance, at least top line guidance, and they haven't done it while they were in the merger agreement. And Maisie. And actually, hold on one second. I'll be right back. Oh, I don't have it. Never mind. I had this spray to spray on her, but I can't find it. So they'll give us guidance, hopefully, and I think they'll do a return of capital. And I never thought the stock would ever be $17 again. I mean, I thought the downside back when this merger was going on would be like the 22 range. So I've been terribly wrong on downside here. And I wouldn't even begin to tell you what the downside could be in a deal break, because I never thought it would go to $17. But I can't overestimate enough how cheap the stock is. So they'll have somewhere between $8 and $8.50 in cash, let's say, after the break fee is paid. and it's a $17 stock, and they should do something around $1.50 in earnings next year, up from $1.20 this year. And that's with a supply constrained market in half of their business. If the company wanted to distribute $3 of their $8 in cash, I'll remind everybody that doesn't remember this. The company was always planning on returning capital. They first were supposed to do it in the fourth quarter of 2020, and then they pushed it to April of 2021. We now know why, in hindsight, they pushed it because they were in a process of selling themselves, so they didn't want to return the capital while they were going to auction themselves off. So we know they're going to return capital. We just don't know how much it's going to be and how they're going to do it. Is it going to be a recurring dividend? Is it going to be a one-time dividend? I don't think they ever thought their stock price would be this low in this situation. So my guess, my hope would be they do something like a tender offer. And the math behind the tender offer is just unbelievable. So they could buy back 15% of their outstanding shares at a price of between $20 and $23 a share versus the 17 it is now. Okay. I don't even think I would tender any of it in that range, just to show you how cheap I think the stock is. So it's not just about getting the stock up. That would retire 15% of the outstanding shares. They would be left with at year end 2022, they'd be left with Maisie. They'd be left with $5 a share in net cash, $5 to $6 a share in net cash, because they'd have the cash flow that accrues in 2022. They'll do about $1.75 next year, not $1.50, because of the accretion of the 15% of shares being retired. And they should do upwards of $2.25 in 2023. And that year they would approach $10 a share, $9 a share of net cash at the end of 2023. This is on a $17 stock. Okay. It should easily trade at a 15 times earnings multiple, if not higher, given the growth rates and the secular growth of the business, underlying business. You're currently paying right now $9 a share ex cash for something that has earnings power of $1.50 next year, which is truly just remarkable to me. It's never traded this cheap before. And the old Magnachip is not the same as the new Magnachip. It's it's an asset-light company that has a clean balance sheet and has secular growth for years to come. The hiccup this year was in the supply side of which is well known in the semiconductor industry. If you look at SMH, which I don't think is a good comp at all, but that's the semiconductor ETF, it's up 25% from the day Magnachip was rumored to be for sale. That's the undisturbed price of Magnachip before anybody knew there was a chance of them being sold. Magnachip was $19 that day. Okay. If you fast forward to March 2022, you can't look at the old $29 price that Wiseroad was going to pay for Magnachip as the equivalent $29 price in March 2022. There are two things you need to add in. First, you have to add in the $1.50 break fee that Wiseroad, of course, wasn't getting in their $29. And then you have to roll forward your DCF 12 months in time. Magnachip didn't generate a lot of cash this year, but that was all in, of course, the implied DCF of Wiseroad when they offered to pay the $29 in March of 2021. My gut tells me that's worth another $2, if not $3, which would just be a 10% or 8% kind of, whack. So you get $450 more on the 29, which means an equivalent value of Magnachip in March of 2022 versus March of 2021 is $33.50. What that means is that any acquirer that pays anything less than $33.50 is actually paying less than the $29 that Wiseroad was paying. And there were 10 people that wanted to buy this company above $20 in the old price. Oh, I kind of lost my track of thought. So Wise Road, so Magnachip was $19 before this all happened. You'll get $1.50 in break. Let's take the 19, let's make it $17.50. And then you're rolling forward the DCF a whole year. You could either do that, or you can look at the SMH, which has gone up 25%. So take that $17.50, make it 25% cheaper, and you get to an undisturbed price of Magnachip at something like you're paying like $14 for it today. I'm fucking this all up in my head right now. I'm going in the wrong direction. I apologize. You take the $19, you add $1.50 for the break fee, $20.50, and you then roll it up 25% for what SMH has done. And you get to a $25 undisturbed price for Magnachip today versus the $17 it's trading at. That's just what it should be worth based on what the overall market has done, the semiconductor index, and your break fee. Now, you can argue you have to then take some money off of it based on the fact that maybe nobody can acquire them now unless you're a South Korean private equity firm, and maybe some risk with Samsung losing some of their business. But regardless, you're talking about substantial upside on a stock that has $8.50 in net cash. From an enterprise value standpoint, 17 to 25 is a double. The enterprise value would double. And the way that the company, I think, will be able to articulate that double will be returning capital. Now, what are your risks? Your risks are that the business has materially changed as a result of this Wise Road deal. That Samsung is going to pull a substantial amount of their business, and that Magnachip will never recover. That's basically your main risk. And I'm willing to underwrite that at these levels over and over and over again. So I am not concerned about that at these levels. I think when you get to the middle of next year, and as the supply constraints subside and Magnachip returns to top line growth with the strong gross margins it's been putting up, the stock will trade at 15 times 2022 earnings. And 2022 earnings, like I said, should be at least $1.50. So that will get you to $22.50 plus the cash gets you to $30 a share. And you don't have to, the cash will be crystallized because they will return some of it. So it's not like it's just going to be sitting on the balance sheet. So it's my biggest position by far. I have well over half my portfolio in this. And I keep adding. You know, I obviously, you don't like to see price action like this ahead of a deadline when there's Korea and Chinese information that we don't have. But I don't care. You know, I don't. It's so cheap that it doesn't matter to me what if the deal breaks on Monday, like I said. So that's, oh my God, Harley, that's a funny question. Can't believe you're even watching this. So what's the question, sir? Can Magnachip give guidance in December, even though the deal is still alive until mid-March? The Magnachip cannot give guidance while the deal is alive. What I was presuming is that the deal dies on Monday. If the deal dies on Monday, then they can give guidance and they can return capital. There can be no guidance until the deal breaks. Oh, David T answered there. Samsung's is over 50% of revenue. They're a huge customer. But there's a lot of different business Samsung does with them. And the rumor was that they were going to pull some of their low-end business from them and diversify it to other suppliers if China takes over the company. There's no comment about what would happen if they didn't take over the company. And Magnachip has not disclosed any of this in its 10Qs, that they are at risk of, that they've been notified by Samsung or that they're at risk of losing business from Samsung. So there's nothing there in their warning sections there. Any other MS questions? And look, I've been deeply wrong about this stock. Deeply wrong. I mean, I never thought it would go below $22. So it's shocking to me, but you know, it happens. And I'm confident 2022 will be much more exciting for this company than 2021. I mean, they've been in a complete information vacuum. IR didn't even return my email from yesterday morning, just asking about how they decide the AK CFIUS plans. Any new cat comments? You guys are such pains in the asses. Lunch plans. All right, we'll talk Groupon really briefly because it just gives me indigestion. They named the new CEO. I don't particularly find the guy very impressive. He was CEO of Zappos for a year and worked there his whole life before that. It means that obviously they're not going to sell the company anytime soon. I think the company is a complete shit show. I think everybody thinks that, but it's really cheap. So if 2022 can show any traction, the stock will double or triple. If it doesn't, it probably doesn't have much downside from here. I mean, they have a clean balance sheet, and they have that other asset worth $4 a share, and I just don't think that there's much to the story right now. Now that you have a new CEO, and that takes away any M&A opportunities. So my whole position in Groupon now is January 23 call spreads. It's a much smaller position than it used to be, and I probably won't be commenting on it too much going forward. I still own it. I think that's still the best way to play it is Jan 23 call spreads, because if it works, it's going to work huge. Otherwise, it's just going to kind of meander along, and that's not very exciting to me. So very disappointed with how Groupon turned out, though I started buying it in the teens in the summer of 2020. I made money on it, but I gave back a ton of it. So my final idea today, which is not for the faint of heart, is CTIC, which is a small cap biotech that has one asset, and it's a cancer asset. I can't really tell you much beyond that, for an unmet need. And they've had multiple phase 3 trials in the past on this indication that have had mixed results. And they're running a third phase 3 trial that's going to read out at the second half of 2022. And they shocked the market a year ago when they said that the FDA has agreed or asked them to file for accelerated approval on this indication ahead of the readout of this phase 3 trial. Kind of speaks to the unmet need of the disease. They filed, and the FDA accepted the application in 2021 and gave them a priority review with no AdCom. They got to the PDUFA date in November, which was about 10 days ago, and they got a major amendment. And the press release for the major amendment said that the FDA requested some more data, and they delivered it 3 days before the PDUFA date. They are not aware of any deficiencies in the application, and that was it. That's what the press release said. The stock went from 250 to 250 to 160 on this news, and that seemed odd to me. But where I got really bullish was the management team did a presentation last week. You could find it on their website. They were at a conference, and starting at minute 3, you just have to listen for about 2 minutes. They discuss the major amendment, and I have never seen a company give that much disclosure and be that confident in the process and where they are with the PDUFA. So basically, they said that they've gone through 3 labeling rounds with the company, with the FDA at that point, and that they agreed to all the FDA's final labeling suggestions. The FDA came back and they told us exactly what it is, detailed information about platelet counts or something. I have no idea what any of this stuff is. And they submitted it. But the key, I think, to the entire presentation is they say that they've looked at the data that the FDA requested, and they think it's a nothing burger. They think not only will it not affect the approval, but he makes a point to say he doesn't think it will affect the label. And you can read his body language. You can hear how the way that they address it. It simply makes no sense to me how the company would be so blindsided to get a CRL in the future based on their current expectations of what their dialogue is with the FDA. The only pushback I can give you is that if the FDA was in its third round of labeling, why did they request this information in the first place? Did something pop up that scared them? Well, it's possible. That happens all the time during a review. I would be worried about that if the company didn't tell us in the same breath that the data does not show anything that's alarming. There are no incentive to hype the stock ahead of this PDUFA. If anything, they have incentivized to not say anything. So, remember that major amendments are a positive thing, not a negative thing. I know I've talked about this many times. CTIC got approved. Nobody thought CTIC would be approved. Not CTIC, I'm sorry, CCXI. And that one was hairy. That one had an AdCom. That wasn't a very positive AdCom. This had no AdCom. The company, they usually do AdComs when the FDA doesn't know whether to approve something. And this is oncology with a priority review for an unmet need. So, where does the stock go if it gets approved? Well, my buddy thought it would go to $5 previously. Now, I think that's a pipe dream. But even if you just get it back to $2.50 or $3 from $180, your downside is probably to $1 because they have a phase 3 readout in this indication 6 months after the PDUFA date or even less. So you don't have to wait years for a resolution here. That's pretty much it. Watch the presentation, make up your own mind. There was one red flag that was a pretty big red flag, was that the CEO bought $5,500 worth of stock in the open market after the major amendment. He owns like millions of options, and he bought whatever it is, 3,000 shares or 4,000 shares in the open market. And that to me is like the reddest of the reddest flags. It's like, what are you trying to prove here? There's no reason why you should be buying $5,500 in the open market. David, he doesn't own any stock, but he's got millions of options, which is pretty normal for most of these biotech guys. I wouldn't have had a problem if he didn't buy any stock. It was buying that token amount didn't make any sense to me. You also have a pretty good shareholder base. Oh, that's the other thing. So one of the major funds owns like half the company. Another major fund blew out of most of its stock after this major amendment, or at least around it. So I don't think they know anything we don't know. I don't think the company told them something and now is telling the rest of us something else. The new PDUFA date, Glenn, is middle of February, something like that. I wouldn't be surprised if this gets approved well before that. If what the company's saying is true, that they went through 3 labeling rounds and they've already agreed on a label, then in theory, once the FDA is okay with the data that they resubmitted, that doesn't show any red flags, they'll approve it. I don't think they'll wait until February. Now, not many things have been approved early these days. So many things have gone past the deadlines or to the deadlines. So I'm not banking on that, but that's also why I'm not selling any kind of like January $2 covered calls or something on it. That's another thing I like, by the way. I like owning stock and selling 3-strike and 4-strike calls against it, because I don't think this is going to go to $5 or anything like that. Your problem with that is you can't sell it on the pop. If you sell covered calls, you're stuck in it because you'll be naked if you sell your common out. I have a pretty big position in this. It's very risky. I have an 8% position in this. I actually owned it before the PDUFA. I was just gambling. and lost a decent amount of money on it then, and then made it supersized after the major amendment. I think it should be 225 right now, maybe even 250, not 180. Any other questions? Any other stocks you guys want to talk about? Blackstone Mineral is one I've never really talked about on here, which is my third biggest position, I think. BSM. You have to have be okay with getting K1s with that, but this one makes no sense to me. So it's a $10.60 stock, and they're currently paying 25 cents a quarter in distribution. So it's a 10% dividend yield, and it's a royalty play. So they don't produce any oil or gas. They lease out the land, and it's the largest mineral landowner in America. And they hedge all their oil and gas a year in advance what the anticipated production is going to be. So 2021 oil and gas was hedged at terrible levels in the summer of 2020, and those hedges roll starting in the first quarter of next year. Unfortunately, their 2022 hedges are also below the strip, but they should be able to hike that 25 cents a quarter distribution to at least 35 cents next year, which puts the yield now at 12, 13, 14, 15% yields with no debt. And when you roll again to 2023, you might be looking as much as a 20% distribution yield, depending on where the strip is and depending on what production is. And there's no debt. It's like less than half an eternity EBITDA with the debt. So it's a very de-risked way to play oil and gas. And you get this big dividend yields, and people don't like it because of the K1, and I don't get it at all. So AMPY I still own. It's a 4% position. And then I also have some April call spreads. I don't have any real updated thoughts. I think the guys on Twitter have done a really good job with it. Tweebs, you could find him on there. You probably know about him if you know about AMPY. I think the company is just been in an information vacuum. They've been silent, and they clearly are trying to figure out the best way forward for the company, whether it's selling an asset to delever, which is my best guess is what they do. And, you're just kind of left in no man's land. And that's why it's sitting at $3. But, it's highly risky when you don't really know what the outcome could be from lawsuits, from whether beta ever opens up again. The company did say in their 10Q that they think insurance will cover substantially all of their claims and business interruption. I think they said a material amount or substantially. So the company does not seem overly concerned about this taking this making them insolvent in any way. It's not really my cup of tea making this. I mean, it's as hairy as it can get. So usually I would like this kind of thing, but I'm fine with it being 4%. And then I have another 4% exposure with the call spreads. I don't know Grow at all. Trying to see if there's anything else I want to talk about. I think we're good. Yeah. I would just like to timestamp Magnachip at $17.03 because it makes no sense to me. It just doesn't make any sense to me. It's a South Korean company listed on the New York Stock Exchange that has no indexes involved in it because it's not in the Russell 2000 or in any index because it's South Korean. It has been an information vacuum, truly been an information vacuum for a year now. And yeah, it just makes no sense to me. Mark 3 for call spreads pay out fairly well, but it may not get the number in approval. I don't like that, Jack. My general experience with these things is they never go up as much as you think they will, and they always sell off on approval. Now, I don't think from $1.80 you have to worry about that. But when it was $2.50 and I got involved, I would have been pretty happy with getting out at $3 on approval. I was pretty sure it would be approved. My friend thought it would go to $5. I don't think that's possible. So I think you're probably going to lose on a March 3-4 call spread. In fact, the call spreads I have on call spreads in CTIC, and they're actually March 1-3 call spreads, which is basically me buying a 1 put and me selling a 3 call. And I put those on to kind of supersize the position. But most of my positions in common, the vast majority of it. All right. With that, I bid you adieu. Good seeing everybody. I'll come back on next week if Magnachip has news. If they just pull and refile, I probably won't come on. PSDH, I was going to mention that, Glenn. I basically all out of PSDH. You know, I mentioned it the last time that I made a big at 1970. I sold most of that at 2020. And at this point, if you have margin and you have cash, it's totally fine in 1990. You're getting a 1% yield for it to expire in the summer of 2022. Almost a 2% IRR. I have no idea if Spark is ever approved. I'm skeptical it will be. I think it's a Pandora's box for the SEC to let those things trade. But if it gets approved, you could have as much as $1 upside. And if he makes a deal, you could have big upside. But it's 1990. I mean, it's not even trading. It's trading below cash, below trust. So you're not really taking any risk. You're taking the risk when it's trading above trust. So if you have capital and you don't want to buy Magnachip, you could put it in PSTH. None of this is investment advice. Obviously, do your own due diligence, especially when you're dealing with these very, very risky stocks that I'm talking about. All right. Bye, everybody. Thanks as always for coming. Have a great weekend.